Think you're all good.
Hello, good evening. Thank you for joining us. I'm just going to give us about 2 minutes for some more folks to join us in our Zoom room. Hello, everyone, and good evening. Thank you for joining us this evening. My name is Alexandria Jackson. I'm the Director of Alumni Engagement here at the New School, and I'd like to introduce you and thank you for joining tonight's New School Alumni Presents Launch Your Small Business. This series offers our alumni community the opportunity to engage with notable alumni on topics that explore their expertise. Our New School alumni community come from a global community of over 130 countries. There are over 90,000 thinkers, innovators, and storytellers working together toward a more just and equitable future in design, fashion, education, nonprofit, and many more. I'd invite you to stay engaged with your alumni by connecting and joining our New School Network, our private networking site just for New School alumni. Before I introduce our presenter, I have some housekeeping notes. Tonight's presentation will be recorded and made available to registrants after tonight's event. Please use the chat for general conversation and use the Q&A function throughout the event to send questions to our presenter. And now I'd like to introduce tonight's presenter. Laura Guarraci holds a Master's of Media Management from the New School, the class of 2015. She's a CPA and consultant with 15 years of experience. She has worked for 10 years in accounting and finance at Paramount Global, including 5 years in New York City and 5 years in Amsterdam. Laura is currently working as an external consultant, serving as an outsourced CFO/controller for tech startups and small businesses. Laura?
Hi, thank you, Alexandra, for that introduction. And yeah, let me get right into it. So this is same information that Alexandria just explained to you guys a little about my background. And basically the reason that I'm super interested in doing this seminar for the New School is that I started mentoring in 2020 at the New School. And at the beginning, I thought to myself, like, I don't really know what this community would find useful from my work because it's so different than, a lot of the super creative and, incredible, interesting students at the New School. But what I found was that a lot of students would reach out to me to review their business plans and to talk about cash flow and taxes and work visas and that kind of thing, because I've lived abroad a couple of times, and obviously finance and accounting is sort of my bread and butter. So I wanted to offer this just as a really basic intro crash course to everything finance and accounting for starting your small business. So that would include becoming a freelancer or starting a business, creating a product or offering some kind of service. Um, and so that was sort of the origin of this seminar. What I'd like you to take away from this is key search terms. I think, the internet is a vast, sometimes it's a great resource, sometimes it's a wasteland of information. And I think that sometimes, especially in this area, there's conflicting information, and there's also a lot of people, a lot of the information that you find high up on your Google hits are going to be somebody trying to sell you something. And for the most part, when you're getting started, you don't need to pay anyone to help you, get your business entity together. Obviously, your taxes can get confusing, but I think with a little guidance, you can avoid a lot of unnecessary sort of like pitfalls in just getting started, whether it's part-time or full-time. So I included my email address here. I also have a little summary. As Alexandria said, we'll send out a recording of the seminar, but I do have a summary that with all the links and stuff that I'm using today. So I'll ask Alexandria afterwards to send that out as well. Um, so, so first thing before we really get into some more detailed information about taxes and such, I just want to kind of put out there that starting a business can be really, really intense. It's an investment of time, not just in the thing that you want to do and that you maybe are great at. It's an investment in time and a lot of other things that you probably maybe don't care about or don't want to be bothered with and never knew existed. And even myself, when I started as a consultant, I initially found that it was really difficult to make enough money to pay for health insurance and to get through, get through the day to day and generate business, send invoices, collect cash, all of that stuff. Is extra time on top of the job that you actually want to do, which is just providing your product or your service. So I would say gather all the information that you can before you especially commit to doing something full time. And always prioritize your personal balance and well-being. That is something that should kind of go without saying. Can I see? Oh, I see. Okay, sorry, just checking the chat. So let's see. Let's get into it. So types of business entities. Basically, there are two key ones that you will want to potentially think about using when you are starting a business. The first one is an LLC. So basically, an LLC is a little easier. Sorry, I just need a second. So registering an LLC is based on the state. And with any business, you could do it yourself through your social security number, but usually you want to register with the state as a business entity and track your activity separate from yourself. Oh, sorry. So I need to regroup. So if you want to just start freelancing, you can start freelancing under your own social security number, but usually an LLC will, as it's a separate entity from yourself, and it'll give you a little bit of protection in case there's any type of litigation against you. It also makes your business a little more official to the people that work with you. So it'll have a name that's separate from you. You can have an employee identification number with the IRS as well. And it usually helps it. I always think of it as a way to track your business separate from yourself. One of the key things is not wanting to commingle your funds between your personal funds and your business funds. And so having an LLC and opening a bank account with your LLC and maybe a credit card is going to allow you to kind of like keep your business separate from you, which is always a best practice. So an LLC is very easy to set up with the state. We'll go a little more into that. I'll show you the website for the state of New York. And there's no real maintenance with it. Once you register with it, it exists and it's out there. And if you have a year where you don't use it, you don't have to file the taxes. If you have a year that has activity, you file an extra form with your taxes, which I'll show you that as well. Yeah, it's really a pass-through entity to you as a person. A corporation is a lot more complicated to create. There's a lot more documentation. It requires getting a lawyer because you need articles of incorporation and you have to process payroll for yourself, which is more complicated. An LLC, it's easier to move funds between you and an LLC because as a pass-through entity on your taxes, you and your LLC are the same as far as the IRS is concerned. A C Corp is a separate tax entity entirely. And so the money that goes into a C Corp is not your money personally. So I put an example here. When Facebook gets sued, Mark Zuckerberg is not getting sued, but he also can't just take money out of a Facebook bank account and spend it himself and throw money in and out as he wants. And so a C Corp is going to give you a lot more protection to your personal finances, but also, as I said, it's a lot more complicated. It makes more sense when you are raising funds. So if you go out to investors and they're going to send you a ton of money to start your business, or you're hiring employees and you want protection and you want insurance for your corporation. So usually early days, and especially for freelancers, a C Corp can be potentially too complicated. Um, Another thing, just a note, I know that some people, I know freelancers who have C Corps, and so I wanted to include this because one of the things about a C Corp is that if you're collecting payments from customers and it's going into your C Corp, some people think that if they are the sole owner and the sole employee of a C Corp entity, they kind of think like, well, that's mine. So it belongs to me, even if it doesn't go into my bank account. But from the eyes of banks and the government, that is actually not true. That money belongs to the corporation and not to you. So I always tell people that it's important to process payroll, and decide a salary for yourself and process payroll regularly from your C Corp. There are small payroll providers. One of them I noted here is called Gusto, which is kind of an example, a good thing maybe to search for. There are others, but Gusto is relatively simple, user-friendly, and cheap. And basically, one of the key things with processing payroll is it will you will get a tax form from your payroll provider. So in this case, if it was Gusto, they send you a W-2 form, which is an employee tax form, and you do have to claim that income on your personal taxes. And if you left the money in your C Corp, you would do your corporate taxes, but you would have no income on your personal taxes, which people think sounds good. But actually, if you do not take consistent pay from your corporation, if you were ever to go and try to borrow money, it would actually be detrimental to you, because if a bank is looking, any kind of lender is looking for, let's say, financing for a car or a mortgage or anything like that, they will want to see pay stubs, they want to see your pay. And telling them, well, this corporation is mine, so all this money is technically mine, that doesn't work for them, because if they want to collect on a debt, they can't really take the money readily out of your corporation. They can only kind of come after you as a person. And so, I've had this happen to friends before who thought that they were doing something good from a tax perspective by not taking up a salary, or taking a very small salary from their C Corp. And then when they go to, buy a car or something, lenders don't want to lend them money because it looks like they don't make any money. So I just want to note that, because I think that that's something important. Also, I found when I was a contractor that lenders have a little bit of extra scrutiny when you are freelancing, when you're, a business owner of some kind. So they want to see consistency. And so that's just something, you may not think you need it now, but it's a consideration for the future. And as I said, with an LLC, that is not the case. Anything that belongs to the LLC counts when you are looking at for financing for anything to borrow money. Okay, so going back to setting up an LLC, I just wanted to actually show you what it looks like for New York State. It's a little weird. So these links will be in the handout that we send out after the presentation. But I'll just show you. So there's a couple things. First of all, you need to here we go. So this is what this is that first link that's in there. And basically, this is all the information about forming a limited liability company in New York State. And the two most important things here are choosing a name. So this link, name availability, you can search for the name of what you want to name your business entity to make sure that it's not already in use. Be careful. I picked a name that did not stand the test of time for me for my LLC, and now I'm embarrassed of it. So don't go too wide with it, because changing is kind of annoying. But yeah, and usually an LLC, generally you would put LLC in the name. And so that's one like resource there before you actually do your like incorporate your LLC. And then weirdly, this is a classic state setup of a website. They kind of buried the lead here because where you actually do the online filing is down here in additional information, this online filing link. So it's kind of hidden. Um, and then it's this here domestic limited liability company is what you want to create. And then this is the page where you actually can go through the steps of applying. And basically you create I think it's called a business, New York Business Services login. You register, and last I checked, it was $200 to get your articles of organization, and then another $50 to do like you can publish the creation of your LLC. And that's a one and done filing. And then your entity will live with New York State. If you need to change the address or information after that or close it down, you would do it online through the New York Business Services login. And then, okay, cool. So let's go back. Okay, so that's this here. And then one other thing that you can do when you're creating that entity is you can get a tax ID number for your entity, which is called this employer identification number. You don't need one as long as you don't have employees. You can use your social security number for all of your tax reporting. And that's something I'll show you that you will share with your customers. And so that's also important if you feel that your social security number is not something that you want to share with customers, which it's personal. It's a thing that some people don't prefer to do. You can get an employer identification number, so you share that instead. So you keep your social security number separate. I've never run into any issues. I've never seen anyone run into issues with that, but it's just something, if it's your preference, you can get an ID number that's separate than yourself. This is a question I get a lot when I'm mentoring, so I wanted to address this also. So if you are a non-US citizen and not a green card holder or a work visa holder, you are allowed to create a US business entity. So LLCs, corporations, anything. That being said, you are not able to reside in the United States, enter the United States using your entity as your sort of sponsor, unless you have a work visa. And work visas, I'm sure any internationals are already relatively familiar with the requirements of work visas. There's all different types of requirements to qualify, and most of them are not met by a company or legal entity that you created. The summary that's in here, we won't look at it now, but I will send that out as part of the handout for after the seminar, if that's something that people want to look into. There's a couple possibilities from entities that you create that you could actually get a work visa, but they tend to have a pretty high barrier to entry. They want to see that you're investing in the economy, and generally that means that there's a significant amount of money that needs to be invested in your entity. So creating a US business entity is not a great way to get a work visa, but it is a way to, you can use it if you are able to open a US bank account. You can use that entity. You can use your employer identification number to have like business passing through in the United States. Okay, so once you have your entity, the key tax form that you need throughout the year, day to day, is going to be a W-9 form. And this is the form where basically you're identifying who you are, who your business is for tax purposes. And this is what you would send to your customers so they can issue you tax forms at the end of the year. It's also what you would collect from vendors who you are paying. And you have to also issue tax forms in certain scenarios at the end of the year so that your contractors, if you hire them, can report on taxes on their end. And so this is where you can see where it says social security number or employer identification number. This is what I was talking about. If you don't want to share your social security number, you can have an employer identification number, and then your name would be your LLC name. And you would say, you would check off this type of entity would be a sole proprietor or single member LLC. And then, so basically, when you're getting set up, the first things to do are to kind of understand your tax requirements, have this form at the ready. You can send it to customers without being prompted. They should be collecting it from you, and you can request it from vendors that you're working with as well. And I'll explain in a little more detail what kind of tax reporting you will need to do at the end of the year. The next thing I would say is once your LLC is set up, you will want to set up a bank account for your LLC. And that's the information that you would give out if customers are where customers will pay you, and also where you're going to pay your expenses out of. So you can link a credit card to it. It can just be a debit card, however want to conduct your business and make your payments, pay your expenses. I would always use a separate bank account than your personal bank account. And the reason for that is that when you're doing tax reporting, that's going to be really important. It's something that, especially as your business grows, that the IRS potentially looks at. And so you want to be really clear about what's a business expense and what's a personal expense. And this is a really clean way to do that. And we'll talk a little more about what you will report as your expenses, but you can include all kinds of things. If you are working late by yourself and you order food, and you can consider that a business expense. And so that DoorDash order is going to be different than a personal DoorDash order. So just clarity there is going to help you in the long run. And then, in the same vein, tracking your expenses, it's important for your taxes. And it's also really important for pricing your product, because if you are, creating an item, we'll talk more about this a little bit at the end of the presentation. But, if you're knitting a sweater, well, everything that you buy, the materials for that are going to be part of the cost that you're going to charge your customers. And so tracking what those expenses actually are is going to help you really manage your cash flow and understand your business. If you're just kind of putting those things on personal cards, it's amazing the things that you will forget, that you won't realize, oh, wow, actually, I spent way more on creating this product than I thought I did. So the ability to analyze those expenses separately is really important. And as I said, also for your taxes. So another thing, this is kind of a really big area, and this is a really high level summary. And I think, a little more independent research is always going to be necessary to understand your filing requirements. But one of the key things about being self-employed is that you are not just running doing your business, you have to run your business also, and you have to do all of the filings and everything as an employer, not just as an employee. So one of the key things is payroll taxes for freelancers, people who are business owners. You have to contribute to your own Social Security and Medicare. When you're employed by a company, you contribute half, and the company contributes half for you. When you're self-employed, you have to pay all of it. And so I'll share some resources in the handout after this session. But one of the most, I think, kind of stressful things at first as you get up and running is knowing that you have to calculate your taxes at the end of the year, and you have to, if you have to remit to the government these taxes, as well as income tax. And so the first year, usually you don't pay estimated taxes because you're getting up and running. But if you do have an income tax liability, so let's say in the first year you actually make money, your income is more than your expenses, then when you calculate your taxes at the end of the year, you may owe income tax to the government. And then the next year, you may have to pay quarterly taxes. The calculation is, it's a tax form. It's a bit confusing. This is an area where a tax professional can be helpful. I think TurboTax is good. I use TurboTax myself to calculate my taxes at the end of the year, but quarterly tax payments, I don't think, are something that TurboTax really does. So it's something to be aware of, that if you are expected to owe over $1,000 for the year, and that means for your income taxes. So if you make enough money where your tax liability will be more than $1,000 for the year, you need to start filing quarterly tax returns. And that's a pretty low threshold. So it happens potentially pretty quickly. So it's something to be aware of because if you miss it, you could incur they're small penalties, but penalties nonetheless. Um, and then a couple other things that kind of are in this self-employment bucket. Unemployment benefits generally don't apply to people who are self-employed. And the reason for that is that if you don't have a full-time job, you're never unemployed. Even if you don't have any clients, you're sort of employed by your business. So that's something to be aware of. There are certain exceptions, but they're kind of, difficult to navigate potentially. And so that is, that safety net is something that a lot of people potentially rely on, and it's obviously a factor in having a full-time job as opposed to being full-time self-employed. I always recommend, if you are starting a business, if you are able to do it part-time while you have a full-time job, while you're getting ramped up, that's always a good way. I mean, it's a lot of work, but then you hang on to these kind of benefits and potentially can exploit those while you're getting your business off the ground. Health insurance, I think everybody knows health insurance in the United States is very expensive. When you are self-employed, you have to get your own health insurance through a marketplace, or sometimes there used to be, like, WeWork used to aggregate insurance. I don't think they do that anymore. There are a couple different routes to getting decent health insurance for an okay price, but they're kind of few and far between. It helps to be married if you're starting a business, because if you can get health insurance through your spouse, you're going to save a lot of money and your business is going to work a lot better. When I started contracting, health insurance was the thing that broke my business model, because it was so expensive every month that what I would have had to charge for my time was way more than made sense, let's say, at the time to charge. And then lastly, I know this is tough if you are self-employed, but I always want to flag retirement savings. The money that you save when you are just starting your career is the most valuable money for your retirement, because it has the most time to appreciate and value. It's something that a lot of people don't think about when they're in their 20s, and I think is really important. If you save a small amount of money in your 20s, it actually could be worth more than saving more money in your 30s because of the time. So, a full-time employer generally offers a retirement plan that comes directly out of your paycheck pre-tax. If you're self-employed, you have to set it up yourself. Sometimes there are benefits. If you make enough money, a self-employed IRA has a very high amount, like a very high cutoff of what you can contribute every year. So if you're making a lot of money, it's great. You can save a lot of money for retirement if you're self-employed. But obviously, those are surplus funds. So it's difficult, especially at first. This is another reason why sometimes having a full-time job while you start your business can be beneficial. But just something to kind of always keep on your radar for when and if you are able to save some money at the end of the year. Also, if you save in a retirement fund, usually that will deduct your tax basis. So if you report and you owe income tax at the end of the year, usually you can even do it after the end of the year. If you're clicking through TurboTax and it says, okay, you owe $3,000 in taxes, you can actually probably contribute to a retirement fund after the end of the tax year and say, oh, I'm assigning this to my tax year, and it'll reduce the amount of income tax you owe. So actually that money was going to go to the government anyway. So that's something to definitely always look into. And even if it's $500, just whatever you can. Okay, so this is for at the end of the year. This is specifically for an LLC. A C Corp tax form is an 1120. That's a different form, and that is it's a full tax return. For an LLC, it's called a Schedule C, and it just gets attached to your personal tax return. And basically, I have the link here, but also this is what it looks like. And basically, this is a financial statement for your business. So you're going to say how much money you made, so total that you received. And then you're going to subtract all of your expenses. So those things include potentially, if you have an office, that could be a separate office from your home, or it could be an office space in your home. So you can say, my apartment is 400 square feet and 50 square feet is my office. And the amount of the utilities, the Wi-Fi, even the water and gas and the rent that goes toward that space can go onto this P&L and can reduce the amount of income tax that you owe, because for every dollar that you say as an expense, you've made less money. So if I charge my customers $100, but I'm taking out $50 in rent and $10 in utilities, et cetera, basically I'm saying I didn't make anything. I'm just kind of breaking even. So this is another reason why you want to track all of your expenses. As I said, office meals, a laptop, anything like that can all be deducted on your taxes. I did write in here, don't get crazy, because sometimes, you want to say, oh yeah, coffee and this and that and whatever. I don't know if the IRS has some kind of algorithm that they're using for this, but I have known people who have been audited, and you want to have support for the things that you say are business expenses. I always tell people, for receipts that hit your email, have a work email, have a folder in that email somewhere where you send receipts into, especially for bigger things. But if you can do it for everything, that would be amazing. Ubers you could get emailed Uber receipts and file them away, and anything that's a business expense. It's hard to keep everything, but especially the bigger things, I would hang on to receipts for your. The IRS has 7 years to audit tax returns right now, which could always change in the future, but at the moment it's 7 years. So they could come to you in 7 years and say, you said you had $5,000 in food expenses for your business 7 years ago. What was in there? And you have to kind of be able to speak to that, which is a lot. So I would say emailing receipts to yourself, or there's also services. One of them that a lot of my bigger clients use is called Expensify. And basically, if you have that service, you can take pictures of receipts and it'll go into this app. And, you can also note down what they were for if it's something you find useful for your business. But obviously, you would need to keep that service for all of the time, that whole 7 years, in order to have access to that information at the potential time of an audit. So that's something to consider. And yeah, so basically, I think that this is something that TurboTax does relatively well, walking you through these calculations. Having an accountant is also great to prepare these for you, but I think that this is something most people can do themselves. But I would just say be thorough, because the more you deduct, the less income tax you're going to pay. And then also tax reporting at the end of the year. So for the money that you earn, it should be supported by 1099 forms that you receive from your customers if you have an LLC. So a 1099 form is the equivalent of a W-2, but for a contractor. So a W-2 says how much money you made as an employee. A 1099 says how much how much a customer has paid you as an independent contractor. And so your gross sales on your profit and loss for your business, your Schedule C, it should basically be supported by your 1099. So you should, if you don't receive them, you should gather them from your all of your customers. And that's assuming that they've paid you over $600 in a year. So the requirements for filing a 1099, one goes to the government, one goes to the contractor. You have to have an LLC or a partnership entity. So C Corps do not receive 1099 forms. They don't get forms at all. And you have to be paid over $600 and not paid via a credit card. Credit card charges are aggregated differently. So it has to be a transaction that went in cash, basically. And so, as I said, you should be receiving them. You also have to issue them to your contractors. So you should be asking for their W-9 form when you enter into a contract with them. And then at the end of the year, you should look back and say, okay, I paid this person $800. I have to put their tax ID, their name, address, and the amount that I paid them. And they're called 1099 NEC, are the ones that go to contractors. And that is the way that the government kind of is informed on money changing hands for people who are not employees. I included this link here to track 1099. That's a service that generates 1099 forms. It's super cheap. It's like maybe $1 per form. Usually when you're starting out, you may have a couple. Maybe it's 2 or 3. A web designer, for instance, would be somebody, if you don't pay them with a credit card. But sometimes you won't even have any, but it's something to be aware of and something that your vendors can request from you. And also if you use TurboTax will ask you for your 1099 specifically. It won't say, oh, how much money did you make? Give me a number. It'll say, fill in your 1099s. And so that'll also prompt you to follow up on them, with your customers. Okay. So this is a intro to, creating a price for your products and your services. This is something that I think is important when you're starting a business, because you want to say yes when somebody asks for your service or your product. You want to sell it to them, and sometimes any sale feels better than no sale at all. And so if you don't know what your time and your product is worth or what it costs for you to create it, you are more inclined to say yes to things that you're not getting paid enough. And I think that people doubt themselves. External people will try to tell you how much your time and product is worth. And then you fall into this trap of your business model will break and you won't be able to sustain your business. So I think that this is just a super high level intro. But basically the 2 types of costs that will hit your business are overhead costs. So there are fixed and variable overhead costs. Things like your rent is a fixed cost. It should be the same every month. And if you have an office, that expense is going to be, the same amount essentially every month, unless you move, obviously. Variable overhead costs will be things like a laptop, a sewing machine, a piece of equipment that's going to help you create your product or service, but that you really buy periodically, one time, or once in a while. But the cost of those things still has to be contemplated as part of your product, because, a laptop costs money. And if you're going to use a laptop for 300 jobs, let's say, over the next 2 years, they never last that long. Then a portion of the cost of that laptop should be included in each project that you complete. And then the other type of expense is cost of goods sold, meaning things that go directly into the product that you create. And this could be anything. It could be a service. It could be, many different types of things. Anything that is directly part of creating the product that you're selling or a service. And so, for instance, some examples are listed here. Fixed costs for inputs for a product. So if you're, creating a t-shirt, there's fabric, there's thread, there's buttons, etc. And those things you should kind of be able to say, well, this is a fixed cost that I know is part of this product. For every shirt that I make, I need X amount of these specific, tangible items. Overhead costs we talked about. But then the hardest thing there's one other thing here. So before we get to time, there could be other external parties that you pay that are part of your cost of goods sold. So for instance, if you are like a software engineer and you say, okay, I'm going to build this app for you, I'm going to build a system for you or something, but you need certain expertise that you don't have. So you need to hire somebody else to help you, or you have a friend where you're like, you know what, I'm going to pay this person $500 to work on this project with me. That cost obviously would need to be included in the cost of the total project in order to make the project profitable. Some people, I think sometimes it feels like, well, it's just me. So, they're going to pay me. And then what I pay other people or other resources or research or anything like that is my costs that I'm incurring, but actually those costs should pass through to your customer. So that's another thing. So people's, the cost of other people would also be part of the cost of your product or service. And then the last thing, the hardest thing to value is your time. So when you start off providing a service or a product, and time also factors in obviously to creating a product. So if you are creating something that's really complicated, that is custom or something that takes a lot of time, the person's not just paying for what goes into creating the physical item, they're also paying for the time that you spent creating it. And also, communicating with people, invoicing them, following up on getting paid. All of these things take time. And so it's always good to overestimate the amount of time that something is going to take you, especially at the beginning. It's a area that's impossible to give perfect advice on because every scenario is a little bit different. And at the beginning, you will do this wrong and refine over time. But I think that the first thing you can do is to research what other people in your market are charging for similar services. Consider the opportunity costs of taking one job. So, sometimes potentially you might think, okay, well, if this person, if I do this for this person, they may help me get other jobs. That's great. But sometimes people will ask you for things that are too small. And you say, okay, well, if I factor in the time to, communicate with them and invoice them and follow up with them, et cetera, and they only want one day of my time, then it might not be worth it. Like you might want to look for projects that are bigger, especially at first, that take up more time. And so the best you can do is kind of, understand your market and try to understand your worth. One of the key things also is that when you have experience in whatever your field is, the person or, your customers are paying not just for your actual time, but also all of the experience, all of the past time that you spent building up your knowledge. So if someone asks me a question and I know the answer, it's because in the past I've spent time researching and understanding, and that's why that information is now in my brain. So I wrote in here, if a first year accountant needed 5 hours to complete a job at $50 an hour, but now I only need 1 hour because I have experience, would I only charge them $50? Well, no, my time is more valuable because I have more experience. So less time, I can charge more money. So it's also something that you have to keep assessing as time goes on. When you are first getting started, it's really difficult. And you will, quote people 8 hours and you'll realize that it took you 20 hours to complete something. And, that's okay. But that might be a reason to learn to kind of start saying no to what people say they only want to pay you for 8 hours. And so if you are able to kind of get a basic calculation where you say, okay, I have these fixed costs, I have variable costs, I have these, all of these items that need to be covered over the year. If I can charge this much for each project, that would be a successful business for me. I think it makes it a lot easier to say no when something is not good enough, or, when people, the dreaded offer of no money for, what maybe seems to them like something simple and, oh, exposure and this and that, but actually everything has a cost and your time is valuable. And so this is sort of just a little beginner to that. Another thing that I think is really important about this area is that when you put some thought into this, if you ever are looking for financing, even if it's from people that even if you have friends and family who want to be generous and invest in your business, but especially if you're going out to really fundraise in a larger environment, and you want to show people like not only that you have a great idea and that you understand your market from a product and service perspective, but also that you are grounded in the reality of the finances. And if you can show just a little bit of thought in this area, I find that investors, it really bolsters their confidence when they see that this is the way that you're thinking. Like, okay, if I have to buy this specific machine to create this thing, well, that is a cost to my business that, will happen one time. And then, when I see business plans, usually I think people naturally are very unrealistic with the way that they think the finances will go, because this is a mindset that is foreign to people who are good at doing something, and never have to think about this until they really start their business. So I find that this becomes really impressive, especially if you are in a creative field or, don't really have a finance and accounting background. If you say, okay, well, my fixed costs in the first year, I think are this, it's like, oh, wow, okay, that's a really great way of thinking. And so this is, important for pricing your product. It's also important for trying to model out your business. And the next step after this would be cash flow. So understanding, well, if I think that I can make X amount in year one, how much money do I need to invest to get through that first year? How much money do I need to come in the door for me to cover all my costs? And if everything takes forever, if I think I should get paid in a month, but actually takes 3 months, how much cash do I need to sustain myself to get my business moving a little bit, before I run out of money and have to kind of fold it in? And this is something that startups deal with at every stage. A third round of financing, they're still constantly looking at cash flow. At what point do we run out of money and not be able to pay our employees? And what's our strategy for being able to raise more money and keep going? And so these are kind of tactics. These very same things are, businesses that have 100 plus employees, they're still doing this exact thing. So I think this is really important. And obviously, if you were to grow large enough and you really want to start a company that is going to have multiple employees, you would get to a point where you'd have an external resource like me that would help with that. Or there are different tools out there that kind of help with this sort of, we call it a budget or a model, and can help you kind of get more sophisticated in the way that you think about your business as it grows. But yeah, this is kind of the seed of that you would grow out of, for that. And so that's actually my presentation. I'm even faster this time than I was last semester. Is unbelievable. But I thought it was longer. So I apologize. I apologize if I talked really fast. But yeah, I'd love to take some questions.
Yes, we have a question here. Do you have any recommendations or tips for U.S. citizens living abroad that are setting up a small business to do work with U.S. entities?
Ooh, interesting. Living abroad, like living abroad on a work visa, like legally living abroad or traveling, because I mean, not that it, I guess, really makes a difference. So if you are a US citizen, you have to pay US taxes no matter where they are, they'll get you. So you can set up the same type of entity as we discussed here. You can set up an LLC or a C corp, and you will still file taxes the same way. Even if your customers are international customers, it's the same. International payments to vendors, like international vendors, or payments from customers who are international for US tax purposes, it all counts. So it all counts as your income and expense for your business. The only wrinkle, and the reason I said living legally, where are you living, is because the wrinkle would be that if you're on some kind of permanent visa in another country, depending on the country, you may have a tax liability in that country as well. So they might say to you, well, maybe you're the spouse of someone who's living and working full time in, let's say, the Netherlands. That's where I lived briefly. And you're making money in the US, but you are a resident of the Netherlands, you're generating that income in the Netherlands, you'll have to check because the Netherlands may want a piece of that. It's like, well, you're here actually. And then what ends up happening, most countries with the United States have a tax relationship where they'll say, if you're paying taxes on income in the Netherlands, you'll write it off your taxes in the US. So you still have to file a tax return, but you'll say, well, I paid this to the Netherlands, so I'm not going to pay it to the United States. But you would need to understand what your tax liability is where you're living, because there could be one.
Thank you. Our next is kind of a three-part question. So the first part, what tax forms are required for product-based businesses versus freelancers setting up as a single member LLC?
They're the same. The registration of your LLC is the same. The profit and loss. So if we go back, I know it's small. Oh, there it is. I know it's small, but this form, which is called a Schedule C, it's the same. The money that you made is your income. So if you're selling, keychains, it would just be your keychain income, and then you wouldn't have 1099 forms because obviously you wouldn't be necessarily making enough money off of one transaction to require a tax form from your customer. But a P&L is a financial statement that goes across every single type of business. So no matter what you're doing, it would be this same form. And yeah, it would just, the only thing that would change would be the support for your gross sales. As I said, like you probably wouldn't be getting, or you definitely wouldn't be getting tax forms from somebody who's buying sweaters or jeans from you.
Next part, what advice do you have for taking a salary from your startup within the first 1 to 3 years as a full-time entrepreneur?
This is a great question. And I think that this is one thing that um, I've seen people in mentoring who, want to start a business and they show me their business, their kind of tentative model and like cash flow that they want to bring to investors. And they're always really ambitious about how much money they'll take out of the business soon. I would say if you are seeking financing or, you're seeking investors to invest in your business, or you're even looking to get, debt from a bank, let's say, the less you take in the short term, the better it looks. Now, obviously, you don't want to take nothing. You need to be able to live. But, if you have in your plan that you are going to take, you know, I mean, also you want to have a value for yourself, right? So you're not going to say, I'm not taking anything, but I want to raise $3 million, but I'm not going to pay myself anything. Like you don't need to be a martyr. But I think being conservative shows the level of seriousness that you have for your business. So, it's really hard. It depends on the business, but I think that, and this is assuming that you have a C corp, right? So if you have an LLC, you can kind of take money as it is available. You want to be saving always for your tax liability at the end of the year. But if you have a really big project and you make a bunch of money and you say, okay, I'm going to put aside my taxes, I'm going to account for the next couple months, my health insurance, et cetera. But then there's excess funds in my business, you can just take it. So 1 month you can take more, the next month you can take nothing. But for a C corp, yeah, I mean, my only advice I would say is just to be conservative, and take what you think you need. Also, as I pointed out, you want to think about what lenders see when they look at your history. So if you're too conservative, then you will that will be the amount of money that lenders look at when they are thinking about loaning you money. And so you don't want to say, well, oh, you don't qualify for the level of a mortgage that you're asking for because you took a smaller salary every month. So I know that's a little generic, but I would say if you're looking to grow your business to be more conservative. If you think your business is kind of flowing and you know that you want to be borrowing money for yourself in the coming couple years, then I would say you could be a little more generous with yourself. Look for market comps if you can to try to understand, like, okay, whether it's a sole proprietor or you're a CEO of a company that's even 5 people, let's say, what can you realistically take out of the business that you think is comparable to your industry? Anything that you can substantiate the amount with, especially if you're talking to investors, is always going to be helpful and will be a way for you to kind of stand up for what you think you deserve, because that is always going to be an area where investors could potentially question, especially if it's just you. So yeah, that's.
Thank you. And do you work with clients in Texas and California in the e-commerce space?
I don't do a lot of e-commerce work anymore, but I have in the past. I'm assuming that question maybe is going to be sales tax related. Is there more to
There
that?
wasn't a second part, but that was from our attendee Adora. If you can just let us know if that was sales tax related, we can answer that question. And just jumping to our next question, in regard to S Corp expense receipts. I have not saved my receipts, but I'm downloading my bank statements for audits. Will this work for the IRS, or should I take photos of my expense receipts?
Um, Bank statements are not considered support for transactions. So I would email receipts to yourself, save receipts, the actual receipts themselves, because a bank transaction, maybe for smaller things, like maybe they'd let you get away with it, but you know, just because something says Apple $2,000 on your bank statement, there's really no proof of what that was. So you could have bought Bose headphones from the Apple store, I mean, I don't think they're $2,000, but so what they're going to be looking for is not even just the receipt. They want to understand why it's related to your business, actually. So, you know, the receipt is sort of the paper documentation to say, well, this is what this was for. And a bank statement doesn't usually do that. Also, a lot of uh, the text, the memos on a bank statement can be really generic, and sometimes they're just letters and numbers. So the IRS is not going to believe you if you say, "Oh yeah, this $5,000 was this thing," but it's just X's and O's in the memo. So receipts for that stuff are going to be important, and it's going to need to also make sense. I mean, another thing that, if you have a business that you have enough activity that you start to use QuickBooks or another type of system to track, your all of your income and expenses. And QuickBooks also is a great system for invoicing customers if you have to generate invoices. Um, that would be a place where you could also put context in. So for instance, if you have a bathing suit brand and you're like, okay, we're going to go to Mexico so that we can shoot a catalog, and we're going to fly 3 people, we're going to pay a photographer, we need hotels, etc. All of those expenses could easily be personal expenses, right? It could have just been a vacation. So having the receipt for the hotel is one thing, but being able to say, well, this is what it was for. And that's also why I really preach keeping the expenses separate between a business bank account and a personal bank account. But yeah, a charge for, a hotel could be anything on a bank statement. So if you have the receipt, and then you're also able to say, okay, this trip was this thing, and it cost this much to shoot this, and here was maybe the what came out of it. Here are the photos or whatever. Not that the IRS really looks at that stuff that deep, but that's what the receipts are for. So I would definitely keep them.
Thank you for that. The next question, if you have a US-based LLC, are there any barriers in selling your products internationally or globally? Do you have any suggestions?
No, there are no barriers. Where it gets a little complicated is that if your um, volume of activity gets to a certain point, you could qualify to have a like international tax. There might be international tax implications. VAT is value added tax, which is the tax that happens when you cross borders. So it takes quite a large volume of sales, but it does happen if you're selling a product that's a more expensive product or you are very successful, obviously. So that's something to be aware of. You can sort of dabble, you can get to a pretty significant level. I think it's at least $50,000 in the year of activity, but it might even be more. But it's something to be aware of. But no, there are no barriers. Obviously, well, they should be able to give you the tax forms that you need, like a 1099 form. They should be able to issue them, but that might be a little more tricky to get the tax forms that you need from an international customer. But as far as doing business and reporting it on your taxes, there's no issue at all. And same with vendors. If you find, somebody, sometimes like there's platforms like Upwork, for instance, you might be able to find somebody who can do an illustration for you that's in Australia. That's totally fine. And you can still include those expenses as well on your taxes.
Thank you, Laura. And then just going back to the Texas and California question, it was related to sales tax and business accounting. They also have a follow-up question. In considering funding for growth, would you recommend VCs versus angel investing, versus capital loans? Does this depend on the specific needs of the business?
It definitely depends on the needs of the business. I think that I've seen some really good VCs that, sometimes will, they want you to succeed, obviously. So they also have ways of investing in their portfolio. So sometimes they have, advisors, and if they're on your board, sometimes they'll be really helpful and supportive and give you business knowledge that you may not have gotten otherwise, which, if you raise debt instead through a bank, you won't get that. And it also, if you take out debt from a bank, there will be costs associated with that. Whereas with a VC or angel investors, generally they're invested in your success. You don't have to pay them anything over, the short term. But that being said, they usually require, not usually, basically always require, reporting. They want to see your plans. They want to see that you are progressing. And the funding environment, especially for tech, but I think in general has changed a lot in the last 3 or 4 years, 3 years, let's say. And it's more difficult. And I think investors want to see what we call like performance metrics. So they want to see where the dollars invested are going and say, okay, well, for every dollar that goes into sales and marketing, how much are you making, and why? Why are things going well? Why are things not going well? That is motivational potentially. And as I said, like you'll have support, but there in a way is a little bit of a different kind of pressure that comes with that. Angel investors, it kind of depends on who they are. But I mean, I think most of my clients, a lot of their investing comes from VCs, and I don't know. I've had good experiences, and I know I've met people who work at VCs, and they're just really engaged. And so that would kind of be what I would say. But I work in a little bit of a different space than an e-commerce space. Sometimes there are incubators that are really cool and interesting. Sometimes there are competitions and different kind of things like that are industry specific that will kind of hook you up with resources and also funding. So if you can find a combination of resources and funding, I always think that that's a positive thing because you'll tap into something that you wouldn't have gotten if you, are issued debt. But of course, usually you're going to be giving away the ownership of part of your business. So that's also something to be kind of a little bit wary of because over time, the amount that you retain control over is going to be eroded as you take on more financing. So it's a delicate balance. It's kind of changes from business to business.
Thank you. Two last questions here. For an LLC, can I change the type of service performed as a business throughout time as I'm figuring it out?
Good question. Yes, you definitely can. In fact, you can have more than one LLC, but you can also offer different types of, products and services through the same LLC. And you can repurpose an LLC. So you can start out and say, oh, this is, I'm making bracelets. And then in 2 years, you're like, actually, I don't know, I'm a freelance engineer and it's the same LLC. The name probably won't make sense, but you can do that. Also, I just want to mention, this just popped into my mind, that if you make money off of a hobby, that's different reporting. Don't include that in as a business because usually income from any kind of something you would consider a hobby is not something you have to report on your taxes and you would be taxed on unless you get to a higher level. So that would be something like if you don't have to call it a small business if it's something that's really small. Like when I thought of making bracelets, I was like, well, if you're just outside a Taylor Swift concert once a year, that doesn't count. But yeah, you can absolutely use your LLC. You don't have to kind of register what your product or service is, so you can use it for anything you want.
Thank you. And finally, just a question about definitions. What is a VC? And what is an angel investor?
So a VC is a venture capital fund. So basically, venture capital funds, they get money from rich people usually, and they will kind of interview your business and they dole out funds. So, and in exchange, they take ownership of a piece of your business. So let's say you say, oh, I've invented this incredible product. Like I have a new battery. I'm inventing a new battery. You present the product, maybe it doesn't exist yet, but you say, I need $5 million to create the battery, but I have the idea. And you convince them, you have to be very charismatic, convince them that it's going to work. And they give you the money and they say, we're going to take 20% of your business. But as I was saying, they might want a seat on your board, but then you potentially exploit their expertise as well. So it's a company. Usually there's not that many people, it's usually a pretty small team. But it's an investment company that kind of, if they believe in your idea and you are successful, eventually you sell the business or the business goes public, they make a bunch of money because they gave you the money to invest in it. Angel investors are people generally that would invest. So an angel investor could be somebody that if you happen to know somebody who has a lot of extra money lying around. And that is obviously a little bit different. Who that person is could range. They could be an expert in their field. It could be your uncle. And usually it's the same. You would be exchanging ownership in your business for them. But generally, it happens, but generally you don't see as many of them necessarily on boards and stuff like that. And yeah, and then obviously, debt financing is coming through a bank. So basically, that's more about the money that's actually in your bank account and your actual finances versus usually you need money to borrow money, which is a little counterintuitive, but usually banks don't care as much about your idea. If it doesn't exist, they want to see that you will be able to pay back the money that you borrow. So yeah, those are kind of the nuances there.
Well, that was our final question. Thank you, Laura, for presenting this evening, and thank you to all of our alumni attendees for joining us tonight. We will send this recording to everyone that has registered, along with some handouts that Laura has prepared. Thank you again, and I encourage you all to connect with each other on the newschoolnetwork.com, which is our private social networking site just for New School alumni. Thank you again, and we hope to see you at an event in the future. Bye-bye.
Thanks.